Good evening, I'm Nima Rajan, and this is Forum Daily for Thursday, June 16th. We begin tonight with a new survey looking into how much trust Canadians have in their institutions. The data indicates people have more trust in their institutions and their neighbors since the COVID-19 pandemic. But York University sociologist Carrie Wu says that trust is highly correlated with how much money people make. Mr. Wu and his colleagues surveyed the same group of Canadians 7 times between the fall of 2019 and winter 2021 on their trust in their neighbors and social institutions. And he says around the world, surveys find people with less money have less trust in their society. Today, Finance Minister Chrystia Freeland detailed financial commitments to help make life more affordable for millions of Canadians. But the measures were all previously announced. Minister Freeland delivered a keynote address about the state of the Canadian economy at the Empire Club of Canada in downtown Toronto on Thursday afternoon. In her speech, Ms. Freeland highlighted the federal government's affordability plan, which she referred to as a suite of measures totaling $8.9 billion in new support for Canadians in 2022. The measures were all included in the past 2 federal budgets and are now taking effect. Meanwhile, the federal Liberals introduced privacy legislation today. It would give Canadians more control over their personal data and introduce new rules for the use of artificial intelligence. The bill was presented by Innovation Minister François-Philippe Champagne, and it aims to fulfill his mandate to advance the federal digital charter, strengthen privacy protections for consumers, and provide clear rules for fair competition in the online marketplace. The digital charter spells out 10 principles that range from ensuring control over information to meaningful penalties for misuse of data. Canada's Chief Justice says the legal system cannot return to the pre-pandemic ways of doing business. Justice Richard Wagner says it must continue to modernize and innovate. He says all players in the justice system are reassessing what they do, how they do it, and how effectively they meet the needs of the people they serve. Mr. Wagner insists access to justice is not just a fundamental right or a service. It is above all a basic human need and an essential ingredient of democracy. Turning to Canada's Natural Resources Minister, who says the world cannot repeat the mistakes it made in allowing Russia to have global dominance in oil and gas. This comes as production of critical minerals ramps up. Jonathan Wilkinson says demand for critical minerals and metals is exploding, which is due to surging demand for everything from smartphones and laptops to wind turbines, solar panels, and electric cars. China is the biggest global player in critical minerals, and Russia is also a top producer. Mr. Wilkinson says the world cannot be dependent on countries that don't share Canada's global view. The Insurance Bureau of Canada says southwestern BC's November floods were the most costly weather event in the province's history. The Bureau released its latest cost estimate for the atmospheric rivers that brought record rainfall, swamped homes and farms, swept away roads and bridges, and killed 5 people. But it says the $675 million figure was only for damage that was insured. It notes many residents were in high-risk flood areas where insurance coverage isn't available, which could cost all levels of government well into the billions of dollars. Meanwhile, Alberta Environment says some areas of the province received up to 160 millimeters of precipitation this week during a heavy rainfall warning. Emergency Management says the heaviest rainfall was seen in areas west of Calgary and south to Pincher Creek and especially west of Okotoks. Several provincial parks and recreation areas are closed due to flooding and unsafe conditions. Canadian National Railway says it has been given 72-hour strike notice by the International Brotherhood of Electrical Workers. CN says the union represents about 750 of its signals and communications employees across the country. The company says the union has given notice of its intention to strike as of 11 a.m. Eastern Time on Saturday. CN says it remains optimistic that an agreement can be reached without a labor disruption. But if there is a strike, it is prepared to continue with a normal level of safe operations. On the East Coast, the union representing Nova Scotia teachers is looking to restore the losses its members incurred because of an unconstitutional law. It imposed a labor contract on them in 2017, And the law, passed by the former Liberal government, was struck down this week by the Nova Scotia Supreme Court. Paul Wozni, president of the Nova Scotia Teachers Union, says the contractual losses of teachers remain unresolved. Up next, a look at interest rates, inflation, and bear markets. We'll have a conversation with Brendan Caldwell of Caldwell Securities. Stay with us. Markets worldwide are back to tumbling on Thursday as worries about a fragile economy roar back to the forefront. The S&P 500 was 2.8% lower in early trading, more than reversing its blip of a 1.5% rally from a day before. And analysts had warned of more big swings. This comes as deep uncertainties loom over the Federal Reserve and other central banks' ability to manage inflation. And it's a narrow path of hiking interest rates, enough to slow high inflation, but not so much that they cause a recession. Joining us now to give us his outlook on the markets and whether investors should be concerned is Brendan Caldwell, director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Thank you, Nima. Couldn't have picked a better day, could you?
Definitely, definitely. Now, we mentioned the U.S. Federal Reserve just raised interest rates by 0.75%. We're hearing from economists that the Bank of Canada is likely to mirror that move next month. But what does all of this mean for consumers regarding their credit cards, mortgages, and overall debt?
Well, if you're carrying floating rate debt, credit card, or any debt that can float higher, you really should look to get that paid off or to switch it to a fixed rate if you can, or something, because my strong view is that interest rates are going to go much higher from here. The Bank of Canada and the U.S. Federal Reserve has signaled as much. So if you have the ability to pay off your debt or put a fixed term on your debt, whether it's your mortgage or anything else, I'd make that happen.
Some important advice there. Now, I've heard of the term stagflation a lot at this time. What does that mean, and are we in it, Brendan?
It means I'm 8 or 9 years old again. Jimmy Carter's president of the United States. Interest rates are on their way into the double digits, and the economy's not growing. So it's the world we had in the late 70s, where prices were rising seemingly out of control, and yet the economy wasn't growing. So stagflation is the combination of stagnation and inflation, which from an economist or a real person's point of view is the worst of all worlds.
And it's interesting that we've been experiencing a bull market for over a decade now, Brendan, but there hasn't been a lot of talk about a bear market, which we're in right now. So why is it called a bear market in the first place?
Well, there are a number of explanations. The analogy of bull and bear, bull is a market that's going up. I guess it means like it's charging ahead. And a bear market is where it claws back all of those gains. And it has hair like this. So a bear market is one where you've got a correction of more than 20%. And a number of the major, particularly US indexes, are in bear market territory now. The Canadian market, because of the preponderance of natural resources, particularly energy and gold, have held up somewhat better. But the tech-heavy indices in the US have come off quite a bit.
You can see why investors are concerned. So should they consider selling everything right now and staying in cash?
Only if you have a near and pressing need for the money. All money's meant to be spent. So if you know in 3 months or 6 months, you're buying a house or you needed this for this or that specific purpose, then yes, probably, because I cannot tell you how it's going to be in 3 or 6 months. But if you have time, as we've discussed before, I would consider adding to this market, not all at once, but put in $1,000 this month. Do $1,000 next month. I cannot tell you whether this month or next month's purchase will be right or wrong, but if you've done the first purchase, whether the market goes up or down, the next one becomes that much easier. And as you start to accumulate money in savings, in investments, that will grow over time, almost no matter what the market does, because eventually it will recover even from the worst of bear markets.
There's always a light at the end of the tunnel, Brendan. Now, just about a minute left here. I want to jump to the R word, recession. We're hearing a lot of concerns around a recession considering these interest rate hikes. Are we there yet? Are we in it? What are your thoughts, Brendan?
Well, the light at the end of the tunnel can also be a train, as you know, Nima. But recessions generally follow interest rate hikes when they're pointed like they have been now. And that's actually kind of the point of the interest rate hikes themselves, is to slow down the economy. But they usually fall in like a year, 18 months after interest rates start to be hiked. In the interim, you're still going to see, I think, wage pressures and inflation pressures, some of it demand driven, people demanding higher wages, but some of it is also supply driven because there is still a shortage of numerous commodities, and from houses to oil to bread, wheat. So I think you're going to see inflation, possibly stagflation, ahead of possibly a recession over the next 18 months. But it doesn't necessarily mean people should be running for the hills, because here and there will be opportunities in the market.
All right, Brendan Caldwell, always great having you on Forum Daily. Thank you again for a very informative interview today.
Thank you, Nima.
We'll be right back. Welcome back. Up now, Forum Daily's weekly market update with Catherine Murray. Catherine is a financial analyst and the host of The Buck Stops Here. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing North American equity markets under significant pressure today. We've got the U.S. markets, the Dow, S&P, and NASDAQ down by about 2 to 3.5%. The Russell 2000, which represents the small cap companies in the United States, is down even more. The TSX right now, midday on Thursday, is down by about 2.7%. Most major sectors underwater, and the Canadian dollar is lower versus the US dollar. Now, of course, the big news this week, and the reason for all of the market volatility, is the US Federal Reserve yesterday raising rates by 75 basis points. Interestingly, the market actually rallied following this. Perhaps it was a bit of a relief rally, but just momentarily, because today, as I mentioned, we are in negative territory again. Interestingly, though, the U.S. Fed Chair Jerome Powell did suggest once again that the peak Fed funds rate would be 3.8%. So that is almost somewhat dovish, despite the fact that he raised rates and there's concern that we will continue to see higher rates. Now, all of this is on the back of the U.S. Federal Reserve trying to combat inflation by raising rates, decreasing demand or the economic activity. The concern, of course, that is all at the same time that perhaps we are seeing a little bit of a slowdown in the broader economy. In fact, the Philly Fed manufacturing data contracted for the first time since May of 2020. May housing starts in the United States were also below expectations, and the initial jobless claims actually were higher versus expectations. So again, there is a concern that we are entering an aggressive Fed tightening cycle at a time when the economy is actually already slowing down. Add to that, the other real concern here, of course, is that can you really combat inflation, i.e., the price of energy as well as food costs, given the fact that one of the key drivers of this is what we're seeing over in Ukraine. And of course, the difficulty from an energy perspective that the European economy is having, and of course, also in the United States and Canada in terms of the cost of fuel. So even if you raise rates, can you really combat inflation and the higher input costs? A lot of investors are really questioning that right now. There are also, to add to the concerns out there right now, a number of Wall Street strategists suggesting that that corporate earnings have to come down because of these higher input costs and because the economy is slowing. So if you have to lower the earnings, that could put, again, downward pressure on the overall stock market. Now, I would point out, though, on perhaps a bit of a positive note, that when you do see these major drawdowns in the market day after day, which we have been seeing, at some point there are some interesting buying opportunities. You're also getting a little bit of comments surrounding that. But also when you see these big moves, it's important to point out that it doesn't mean that the most experienced professionals, large cap money managers, are selling their positions in perhaps funds that you own. They might just be sitting and holding tight. But what can happen is hedge funds have to often unwind their positions in order to raise funds for redemptions that their clients might want. They might want to redeem their dollars. And hedge funds tend to have levered positions. So when you lever up your holdings, the unwind of that can have exacerbated moves in the market and the marketplace. So I'll leave you with that. Certainly a lot going on. I'd also point out as well that there are expectations that the BOC, the Bank of Canada, will also follow suit and follow the Fed in terms of raising rates, perhaps 75 basis points. And also, interestingly, there's concerns out there right now that more central bankers will be doing the exact same thing. We actually had 3 central banks around the world raise rates today, again, following the Fed's moves yesterday. I'll leave it there, Nima. Back to you.
All right, thanks for that, Catherine. For more analysis and news on the markets, tune in to Catherine Murray on The Buck Stops Here. Well, on the note of interest rates, the Bank of England has raised interest rates by a 1/4 percentage point. The Bank of England's action on Thursday took its key rate to 1.25% and marked 5 consecutive increases that began in December. The Fed raised its benchmark rate by 3/4 of a percentage point on Wednesday, which pushes it to a range of 1.5% to 1.75%. Meanwhile, the cryptocurrency company Circle says it will start issuing its first euro-denominated cryptocurrency later this month. It's a stablecoin known as Eurocoin, and it would be the first stablecoin in euros, backed by a large player in the industry. It could potentially become a major conduit for moving cryptocurrencies throughout Europe. A stablecoin is backed by hard assets and acts as a bridge between traditional financial services like banks and those who want to invest or lend in cryptocurrency. News from around the world up next, so stay tuned. We'll be right back shortly on Forum Daily News. Major European leaders are visiting Ukraine to denounce the brutality of the Russian invasion. This comes as Kyiv fears Western resolve to help the embattled country could wane. The visit carries heavy symbolic weight because the leaders of France, Germany, and Italy have faced criticism for continuing to engage with Russian President Vladimir Putin. After arriving in Kyiv today to the sound of air raid sirens, the leaders headed to Irpin, a suburb of the capital. It was the scene of intense fighting early in the war, and many civilians were killed. Meanwhile, NATO defense ministers have gathered in Brussels also about Russia's ongoing war on Ukraine. They're discussing ways to bolster forces and deterrence along the military alliance's eastern borders. This to dissuade Russia from planning further aggression. Moscow's invasion of Ukraine has led allies to rethink strategies and to agree that NATO forces should be present in greater numbers on that flank. The meeting of defense ministers comes ahead of a June 29th and 30th NATO summit in Madrid, which will be attended by Prime Minister Justin Trudeau. To the east, foreign ministers from India and Southeast Asia are meeting in New Delhi. India's External Affairs Minister says India and the Association of Southeast Asian Nations face geopolitical headwinds from the war in Ukraine and its impact on food and energy security, prices, and supply chain. He says India fully supports a strong, unified, prosperous ASEAN whose centrality in the Indo-Pacific is fully recognized. Turning to Cuba now, which has produced only half the sugar it had projected for the season. Authorities acknowledge while they will cover internal demand, they will not be able to meet their international commitments. The government agency that regulates sugar production says only 53% of the harvest has been fulfilled, and the sector is in crisis. Officials say the problems behind the low production include a shortage of herbicides and fertilizers, a delay in starting up sugar mills, and lack of fuel due to U.S. sanctions. Well, in the U.S., severe weather has forced Abbott Nutrition to pause production at a Michigan baby formula factory after recently restarting. The company says production for its ELECTRIFICATION specialty formula has stopped, but it has enough supply to meet needs until more formula can be made. Abbott says it needs to assess damage and resanitize the factory. This comes after severe thunderstorms and heavy rains swept through southwestern Michigan on Monday evening. Abbott had restarted its factory in Sturgis on June 4th after it had been closed since February due to contamination. Not so beautiful times for Revlon, which has filed for Chapter 11 bankruptcy. The 90-year-old multinational company has been weighed down by a heavy debt load, disruptions to its supply chain network, and surging costs. New York-based Revlon says it expects to receive $575 million in financing from its existing lenders, which will allow it to keep its day-to-day operations running. None of Revlon's international operating subsidiaries are included in the proceedings except for Canada and the United Kingdom. Moving to France now, where McDonald's and related companies have agreed to pay $1.3 billion to the French state. This to settle a case in which the fast food giant was accused of tax evasion. French prosecutors say a Paris court approved the settlement on Thursday. That means a tax fraud investigation targeting the company will be closed. It had been opened after a legal complaint by unions in 2016. The company was accused of hiding French profits in lower tax Luxembourg and reporting artificially low profits in France. McDonald's has said it is working with French tax authorities. Italian luxury sports car maker Ferrari has outlined an electrification strategy calling for 40% full electric and 40% hybrid models by 2030. CEO Benedetto Vigna confirmed today that the first electric car will be presented in 2025, with the first deliveries the following year. Its first hybrid model was the limited edition LaFerrari, launched in 2013, capitalizing on Formula One technology. A survivor of the 1989 ÉCOLE POLYTECHNIQUE massacre is being recognized with an honorary doctorate from the school. Natalie Provost was shot 4 times after a gunman, motivated by a hatred of feminists, opened fire on campus, killing 14 women. The school, now known as Polytechnique Montréal, says it wants to pay tribute to her resilience, her professional accomplishments, and her work in encouraging young female engineers. Ms. Provost has since become a prominent gun control advocate and spokeswoman for the group Poly Remembers. Take care, Canada. We'll see you next time on Forum Daily News.